Good afternoon, good morning. Welcome to this lecture series where we will discuss in detail what can tax digitalization teach the digital public infrastructure community. And this is a part of a new lecture series that is co-organized by the International Center for Tax and Development and the World Bank. And today I'm joined by Fabrizio Santoro from the ICTD, Isaac Amoako from the Ghana Revenue Authority, and Kalpana Kocha from the Bill and Melinda Gates Foundation. So let me just hand over the word to Fabrizio to introduce himself, as well as Isaac and Kalpana. Thank you.
Thanks, Anders. Hello, everyone. I'm Fabrizio Santoro. I'm a research fellow at the International Center for Tax and Development. I'm mostly a researcher on tax administration and tax compliance. And in the last few years, I work specifically on projects on digitalization in tax administration. Nice to see you all. I will leave the floor to Isaac for introduction. Thank you.
Thank you very much, Fabrizio. My name is Isaac Kobenamwako. I work with the Ghana Revenue Authority. I have been working with the Transformation Office and also with ICTD in a number of tax research. Today, I'll be talking about the experience of the Ghana Revenue Authority in our digital transformation journey. Thank you very much.
Hi, everyone. My name is Kalpana Kocha. I am the Director of Development Policy and Finance at the Bill and Melinda Gates Foundation. When it comes my turn to speak, I'll tell you a little bit more about what our team does. But for now, we are a small team of economists working on various issues very closely linked to public finance on both sides, expenditure, revenue, and very happy to be on this with actually two of our very strong partners, ICTD and the World Bank. Thanks.
Thank you very much. Without further ado, let me kick it off with the presentation from the World Bank side. So obviously the World Bank is heavily engaged in taxation. At any given moment, we have about 100 tax projects around the world. And a large part of what we finance on the tax administration side is really digitalization in all of its shapes and forms, because obviously that requires a tremendous amount of resources and know-how in terms of integration services. So I sit in a global unit called the Fiscal Policy Unit, and we work in this area, and I lead our work in that unit on the digital side. Let's see. Can you see the slides?
Yes, Anders.
So the first question that comes to mind when you work on the taxation side is, what is digital public infrastructure all about? And reflecting a little bit on this, I took two definitions from the World Bank and from Gates, and you can see it's about digital services at the societal scale. So that means that we're talking about something beyond the tax administration. So it's typically around IDs, payments, and data sharing. If you look at the bank definition. If you look at Gates, it's very much similar, but in Gates, you stress the economic opportunities and social services, which is very nice to have like a purpose for the infrastructure. And again, you say it's the entire economy. So we're going beyond an individual agency. And it's about people, data, and money, which is a smarter way of saying ID payments and data sharing, I think, right? So we're on the same page here. So the question that would come on the taxation side is, well, what kind of services is the tax administration providing that could be considered infrastructure-related services? Again, I go beyond taxation because that's very narrow. And then I would reflect a little bit on, okay, so if taxation is a DPI, what are the consequences? How will it have to operate differently? So if we start with the services, because that's where infrastructure becomes more concrete, because it's a very abstract concern or a term. And what I would do here is just give you some of the things that I picked up in the recent years that goes beyond merely tax. As a colleague said, there's more to tax than tax. So obviously the first one is identity verification, if you look at the business side here. So that is me using my tax identification number to open a bank account, and the bank using that to check my creditworthiness with credit bureaus. That's standard, but very important. Increasingly, new products have come along. So for example, in Denmark and Norway, I'm sure there are others, I, as a consumer, when I apply for a credit card, I can tell the tax authority to share limited data amount with the credit card company. So the benefit is I don't have to go and copy these things and send it to the credit card company. It's easier for the credit card company to get it electronically, and they don't have to handle it as much. And they can better rely on that data rather than me putting some things together. So hopefully I would get better rates. Other examples are, for example, authorities that have developed apps for transferring vehicle ownership. And then you say, well, why vehicle ownership? And the reason is that many tax authorities have a number of data linkages to other government databases, and that's part of assessing people's wealth and so on. So it's kind of a spin-off. And two other spin-offs actually come from our Russian colleagues. So they have developed, because they have a strong data programming and development business, applications where companies can put in their TIN, their tax identification number, and see if there are any grant programs for them. Or they can even help companies develop their legal charter. So there are different kind of forms of incorporation in Russia, and they will basically draft what a lawyer would do. So it's an example of something that maybe is slightly outside the scope of DPI, but I thought was interesting to mention. If you look at the economic policy side, what is important about tax administration is it's basically the government's data warehouse on all formal transactions in the economy. So if you want to model the impact of a change in tax policy, you can see it directly on the taxpayer file if you have access to it. But you can also do many other things, like in Kenya, they declared certain bills to be void, and the tax authority could see the changes in behaviors that people are trying to get rid of their large money bills. But there are many other things you can do with that data. For example, in a conversation recently with Indonesia, they expressed their interest in using e-invoicing data to assess inflation. So e-invoicing data is what companies buy and what they sell. And if you can see what the unit prices are, you can get a sense at a very granular level of what inflation are. Obviously, when you have a shock like COVID, you can monitor what happens to the small and medium-sized enterprises or vulnerable groups in society. Are they not reporting income, lower income, and so on? So it really becomes an important tool as part of economic monitoring. Similar with social protection, and I'll go through a couple of examples. You can use data in the tax administration to check whether the beneficiaries are really eligible to receive benefits. And a few odd ones at the end on health. So ATO colleagues, Australian Taxation Office, use data to identify people at high risk of contracting COVID. We said, well, how does that work? Well, if you are a nurse and you're an Uber driver, then, at night, then there's a high risk of you spreading, COVID to others. So that's how they use the data. In Denmark, they were asked to identify people selling performance-enhancing drugs. And what they did is used information about people that imported empty pill classes, but were not in the pharmaceutical area. So it's just an example of some of the innovative uses that comes out of this piece of infrastructure, if you like. Here is a story from HMRC. So they basically use data in the taxpayer file to put together a corona job retention scheme. So see how many people are there, what kind of incomes, and so on. So you can basically model your targeting, and you can figure out how much it will cost to provide that kind of a scheme. Here in the US is another example using tax data to assess upward mobility. So how likely is it if I come from a lower income group that I will progress in income groups? And you can see here in the northwestern part, you're more likely to have upward economic mobility, and in the southeast, less likely. Here is a study by my good friend Sandy Pentland. So they used tax data in Colombia to figure out that almost 1 million people were not eligible to receive benefits, and the same amount were eligible but didn't receive the benefit. So there was a huge opportunity to improve the targeting. Another one here is from Australia, where they use tax data to identify people that were not eligible, again, to receive JobKeeper support. So you can see in the red rectangle I circled, 6.9% and 2.3% of applications were stopped. So if we're going to have these services and develop many more, and it's a little bit like the internet, trying to figure out what will come of the internet, and we are 1975, right? So it's a little bit difficult, but this was an attempt to show you what is coming our way. Well, what do we need for taxation to become an infrastructure? Well, I think the first thing is a change of culture, because tax authorities are not the sharing kind, because there's so much both legal but also cultural tied into data privacy. And we also need to increase the mandate of the tax authority to merely collecting taxes, right? I think the second thing is kind of more behind the scenes, behind the curtain, is to improve data quality, because if the quality is not good and outsiders rely on the information and it goes bad, then it's going to leave a lot of resentment towards this kind of data. We need to invest in better metadata. And why do I say that? Because other people, when they capture data, you don't necessarily know what it means. And tax authorities have experienced that for many years when they get data from other parties. So there needs to be clarity on that. And like, for example, Singapore, they have an open repository of all government databases, so you can see what kind of data is there. So that would also potentially increase the usage. Enhanced data sharing arrangements will be needed, and that could be a political issue. Should the tax authority get access to credit card company information, more detailed banking data, and so on? But obviously, the more information the tax authority has, the more value it can bring to others. And again, there are other sides of this coin if you're worried about data privacy and the abuse of data in certain countries where the governance arrangements may not be conducive. Also, we need to look at new functionalities. So, for example, sending data back and forth, that's fine. But what if we can make these linkages a bit more functional? Like, for example, in the United States, the tax identification numbers were pushed by the Treasury Department. Why? Because the Treasury did not want to pay vendors when they owe tax money, right? So there needs to be a little calculation there to say, well, we were going to give you $1 million, but you owe 500,000, so we'll just pay you 500,000. So there needs to be that calculation rather than just sending data. It could be if you're not good standing, you cannot bid on contracts. So figuring out what that would look like, and that gets us to permitted data. So tax authorities know that some data they cannot use for anything. And similar, if data originates at the tax authority, maybe they cannot be used for anything. So if I'm applying for a government position, for example, should they be able to use tax data to see, well, Anders, we have some concern about you? Probably not a good idea, right? Investments in API which are basically the digital interfaces between the tax authorities' data and the outside world. And here I would make a plug for what MIT has been working on, which is called OPAL, Open Algorithm. What that does is anybody outside, say, tax authority, can query data in the tax authority without getting access to the individual records. So if you're a researcher, you can get full access. You don't want to know my tax record. You want to know certain groups of society and so on. So what happens is, instead of you getting the data on your laptop to work with from the tax authority, you send the question to the tax authority, and their databases run the query and send you back the result. So that would be a boon for any researcher, any public policy area, in any Ministry of Finance employee. Invest in ecosystem partners. So if the systems are tied together, for example, accounting systems sending automatically data to the tax authority and vice versa, you need to have a community to discuss how to do this. It's not enough to just say, this is how we'll communicate the data. You need to discuss how we're going to set it up and so on. And that also goes to data partnerships. Many tax authorities cannot always attract the best researchers. So having a partnership with universities, think tanks, international organizations, and others to give them access to the data and maybe help shape different tasks where they would like the external partners to help out could be a very good idea. But all of this, of course, assumes a strong systems development capability. Some countries, again, like my own Denmark, have created an entirely separate agency to just do the systems development. So basically, you have the Ministry of Finance, you have the tax authority, and then you have a digitalization agency below the tax authority. So all of this, again, stronger governance will be needed. We work with the Global Business Blockchain Business Council on governance and legal aspects of mass implementation of blockchain-related tax infrastructure, and a number of more detailed recommendations you can look at there. So overall, if we're making taxation a piece of infrastructure, more investments in the areas I put in the slides will be needed. I will stop here and thank you very much for your attention and hand over to Fabrizio.
Thank you, Anders, for the very informative presentation. I'll share my slides. Going full screen. Yes, I can see it. Awesome. Right. So at this point, I think I'll connect with what Anders was talking about by presenting a specific use case for DPI, tax administration. What can we learn about the potential of DPI to strengthen tax administration? This comes from the abundant research work doing under the digitax program, which now ended, funded by the Gates Foundation, and which now is being continued with a new grant for research for the next 3 or 4 years. The digitax program was all about producing novel, original, robust research on the intersection between the DPI building blocks, such as IDs, payments, data exchange systems with tax. In these sessions, I will try to summarize the key learnings, and I also want to say that we will go into detail in each of these subtopics throughout the webinar series in future sessions. So just to summarize again, what do we mean by DPI in the case of tax-related DPI? Well, we could start by talking about digital IDs, which could provide essential data to the tax administration, helping tax administration to uniquely identify and authenticate the identity of taxpayers, reducing, say, ghost taxpayers in much of the same way as digital ID data in India has been used to eliminate ghost employees, and in improving the quality of information around the identity of each taxpayers. Digital payment systems, of course, which are gaining so much momentum in the African continent, could be exploited by tax administration in order to raise more revenue through payments of taxes digitally, but also when accessing information on the transactions, the digital transaction between businesses and consumers. Try to monitor economic activity and identify taxable activity. Of course, data sharing system, consent-based, seamless data sharing across public institutions, across private sector and tax administration could definitely benefit the latter in terms of gaining more information around the identity and the economic sources of taxpayers. There could be also other emerging new DPI solutions, microservices like electronic invoices platforms, which are also quite connected with the digital payment systems in some countries. These platforms for electronic invoices, again, produce a huge amount of data, which could be used by tax administration to improve and enforce compliance. Theoretically, DPI comes with huge promises to strengthen tax administration across a range of factors. The DPI approach could definitely reduce administrative costs and efficiencies. Everywhere where DPI is applied is all about is based on an efficiency rationale. It could help reduce on the taxpayer side reporting and compliance costs, as say transactions are now digitalized, improving taxpayer services, say through digital payment of taxes or a registration for tax purposes, which is based on the digital ID, limits scope for corruption and collusion as physical interactions are reduced, inevitably increase the transparency and accountability in the tax system, and ideally in the long term improving revenue performance. Of course, these promises have to be contextualized in the context of African countries, which are also quite different one from the other. And thanks to our research, we somehow mapped some key patterns around the key features of the ecosystems in which tax administrations in Africa operate. These systems are characterized by persistent face-to-face interactions, which come with a preference of taxpayers to interact physically with tax officers. And this is also related to a certain dependence on cash. I'll talk about this in a second. The fact that, yes, governments are investing a lot in DPI solutions, but manual processes and legacy systems are still there and present a burden throughout the digital reforms. Taxpayers, when interacting with technology, like all of us, face quite high compliance costs and usage costs. As Anders was saying, certain economies in Africa are still characterized by limited data governance. It's still unclear how data sharing could be regulated. There are still persistent digital literacy challenges and an infrastructure which is still in its nascent stage. Interestingly, these challenges affect tax administration, but they actually affect government entities as a whole. Think about finance ministries. So when we talk about digitalization in tax administration, of course, we're talking about broader aspects of state capacity. So what do we know so far? What do we learn in the last 4 years of research through the DigTax program? First off, I can probably summarize the key learnings on our research on digital IDs and the integration between digital ID systems and tax administration systems. Again, we're going to have a specific session on this topic in the future. This is just a quick summary. Well, we focused on Ghana and Uganda, 2 countries where digital ID data was integrated in the tax administration databases, and tax admins there had access to taxpayer level ID information. And they also reshaped the registration process for tax purposes by leveraging digital ID data. In Ghana, for instance, they just totally replaced tax identification number with a digital ID number, the national ID number. In Uganda, instead, they introduced a new an easier way of registering for tax purposes, where you insert your ID number and then a taxpayer identification number is automatically linked to your ID. Well, such solutions, of course, have huge potential to better identify and register taxpayers en masse. So we document a huge increase in registration numbers in just 1 year. They facilitated registration in the sense that they brought in the tax base new categories of taxpayers, rural taxpayers that were informal before, female taxpayers as well. So there's a quite interesting evidence around addressing barriers to registration for marginalized categories. But when it comes to impacts of revenue, where the evidence is still mixed, short term, the evidence is still rather inconclusive. In Ghana, there is some positive evidence. In Uganda, we don't know yet. And this links, of course, to gaps that still persist in tax administration when it comes to manage a much larger number of new entrants or new registrations, how to deal with them, how to enforce it, and onboard them in the system. Those are quite important challenges. Interestingly, though, as probably Andres was saying, the data from digital IDs not always fit the needs of tax administration, because they collect different information, and some other information that tax administrations need are not there in the digital ID databases. What about digital payment systems? Here we based our work on survey evidence from 5 different countries: Rwanda, Ghana, Uganda, Tanzania, and Burkina Faso, mapping drivers of adoption. Well, first off, cash still remain kings, and digital payments, yes, mobile money-based payments are quite popular, but they work in parallel to cash. And adoption of digital payments depends on a range of factors, which are mostly related to the usage of digital payments along the supply chain, certain familiarity and readiness when it comes to technology, know-how, and financial inclusion. This digital divide is quite interesting with digital payments, because we document the same for other tax services like electronic filing or electronic billing machines. We also study a lot the potential of fiscal incentives and fees removal in order to spur adoption. They seem to be working both in Ghana and Rwanda. Again, we have very limited evidence on the impacts, transformative impacts on revenues. These are often short-term, mostly because taxpayers, merchants, after adopting digital payments, would just quickly revert back to the previous tax liabilities remitted through some strategic offsetting. We did very little work on data exchange systems, and we plan to do more with the new grant. There's still data sharing in governments and industries still quite limited, mostly because of stringent data sharing regulations in the private sector. And still, the access to new data requires tax administration to have the adequate resources to put this data to its best use. So in conclusion, unsurprisingly, technology is just a tool and not a silver bullet for all issues in tax administrations. And when it comes to understanding how DPI can be embedded in current digitalization reforms, we need to first consider that other complementary investments are still needed. Investments on basic IT infrastructure, investments on unlocking the potential of already existing data that is already with the tax administration, investments in training, sensitizing, and staff, tax officials that have to embark in a new digital solution, and of course a conducive regulatory background. What does it mean this for DPI? What's the future of DPI? Well, we argue that this frenzy of implementation should be coupled with some coherent reform strategy that would consider the actual needs of tax administrations and first address the persisting challenges. DPI should be embedded in broader administrative reforms that look at governance, security, ownership, and interoperability. Tax administration should be involved in this multi-stakeholder approach, working together with industry and CSO in order to introduce the services that make sense for the population. And as probably Andres was saying, in the long term, the tax admin system itself could be functioning as a DPI, as is happening in India already, where tax data is openly accessible and reusable, and tax solutions are interoperable, open source, and inclusive for all. I will stop there for now, and I will leave the floor to Isaac to have a deep dive in the experience of the revenue authority.
Thank you, Fabrizio. Are you able to project my slide for me? Or I can do that myself.
Can you try, Isaac?
Yeah. Is my screen visible?
Yes, now it's visible.
Okay.
Perfect, thank you.
Thank you very much, yeah. So I would give you the experience of the Ghana Revenue Authority in our digital journey so far. I would go to the various initiatives that the Ghana Revenue Authority has undertaken over the years. In 2011, November, with a program from the World Bank known as the G-Government Project, we partnered with the Registrar of Business in Ghana, where two systems were integrated. That is the tax administration system of the Ghana Revenue Authority, known as the TRIPS system, was integrated with the Registrar of Business, such that when taxpayers go to the Registrar of Business and register for their businesses, the tax authority automatically gets that data without the businesses going all the way to the tax authority to go and register again. So that was one good project that the World Bank funded, and we implemented that in November 2021, and that has helped us to date. We also, in 2017, September, implemented what we call a paperless import declaration system at our ports. This reduced the turnaround time that importers would have to take at the ports of the country. And that also helped with our ranking in the ease of doing business. We did very well when we implemented this particular initiative in 2017. Fabricio already talked about the digital ID integration between the Ghana Revenue Authority and the Ghana National Identification Authority. This collaboration allowed us to automatically convert our existing taxpayer identification numbers for all individuals, and then we use their unique Ghana card numbers instead. The advantage here is that these numbers are biometrically registered, so it helped us avoid the duplications where the same taxpayer, an individual, could be duplicated on our platform. By replacing the taxpayer identification number with the biometric one, we were able to increase our registration base drastically. But as Fabricio had already said in some research, the revenue potential is not yet commensurate with the large volumes of taxpayers we were able to get when we did this integration. Also, in 2021, July, the Ghana Revenue Authority came out with a policy known as the cashless policy, where we stopped asking taxpayers to go to the various offices of the Ghana Revenue Authority to make payments. And all payments were done either through a bank or you go online by the use of a card system or the mobile money, which is most prevalent. You are able to pay your taxes to the government, and that has also been very successful. Coupled with that is also the ability for taxpayers to file their tax returns online. Hitherto, they have to bring manual paper forms to the GRA offices, and they normally come during the last peak hour or the due date, almost close to the closing of the day, and there are sometimes long queues late into the night. But with the advent of online filing, all such queues have reduced, and in some cases, it's been eliminated. We also brought the electronic levy tax, that is in May 2022, where we were imposing a levy on electronic transfers on what we call a mobile money transfer system, and also on the banking sector, where every transfer, a 1% tax is imposed. Then we also improve some services that taxpayers can access on our platform. One is the electronic tax clearance. These are documents that one may need when they are bidding for government contracts, or they have to prove that they are tax compliant. That was also automated successfully in 2023. So these are some of the initiatives that the Ghana Revenue Authority has undergone in our digital journey so far. I will now move on to a topic I call incentive to drive the usage of digital technology from the general public and the businesses. When we implemented the electronic transfer levy, so the electronic transfer levy is a levy imposed on all electronic transfers, and a 1% levy is computed when that transfer is done digitally. In order to drive usage, we introduce an incentive we call specified merchant payments. And this specified merchant payment simply is payment that you make to merchants, those who operate or accept payment online. We call them merchants. We place the exemption on the final consumer, that is the taxpayer, that if you go and make a purchase from somebody who is compliant, then we waive the 1% tax off your purchase. And the person needs to be registered with the Ghana Revenue Authority for income tax or VAT for this exemption to be able to kick in. And that was supposed to, one, protect compliant taxpayers. With implementation, we've got mixed reaction as to whether this policy is in the right direction, or there could be a hybrid or a mix of it. So the pros is that customers get exempted if they deal with businesses who are compliant. And then also customers were being encouraged to only look for compliant businesses to deal with. In that case, we were hoping that non-compliant businesses would suffer and therefore would run to the tax authority and get themselves to be compliant. But the cons is that a large number of informal businesses were rather affected. And these are the sector who would not ordinarily come to the Revenue Authority to come and register, despite the fact that we've created an incentive mechanism to ease it on their business. But we were still realizing that they were not coming, despite the existence of this incentive. We also realized that the incentive seemed to penalize the final consumer if the business is non-compliant. So some are like, why should I be the one to suffer if a business is not registered with the tax authority? Why should I end up paying the 1%? So there are suggestions that another design should be looked at where the punishment probably should be shared, either partially by the final consumer and the business. But it looks like this particular incentive, well-intended, seem to affect those in the small business sector more than the formalized business. So that's the incentive structure. Yeah. The areas that GRA would like to focus on once we've got a number of these initiatives going successfully is in data analytics. We've got very large volumes of data, especially when we integrated with the financial sector, where the per second transactions are all being transmitted onto our databases, and then we can see the granular details of financial transactions. If we're able to make insight into this data, then we will be able to come out with better policies for government. Another area which is very critical is data sharing between government agencies. That seems to be the major hurdle that we have currently as an organization. Most of the data sharing agreements are on an MOU basis. We don't seem to have a strong legal basis that would enforce non-compliance. Some government agencies refuse to share data because there's no legal enforcement. So in the next future, if we could get a legal basis to force government agencies to share data among themselves, then we can do better prediction. Then also, we need our staff to be digitally savvy. That seems to be lacking. We've created a training school in the GRA where we are trying to impact digital knowledge to a large volume of our taxpayers. So this, in a nutshell, is what the GRA is doing in our journey on the digital infrastructure. Thank you very much.
Thanks, Isaac, Anders, Fabrizio. Tough coming after so many great presentations. I don't have anything to share. I'm just going to talk. So let me just explain the role of our team on in the Gates Foundation is essentially is just the way we think of ourselves is to support ministries of finance in low-income countries to raise as much money as they can to finance their development investments. So this includes funds from bilateral donors, from multilateral organizations, even private sector creditors and investors, but importantly, the governments themselves. And that's, because of course, as you all know, this audience probably doesn't need to be reminded that even in the poorest countries, domestic revenue is the largest source of development finance that's available, much larger than all of the other sources. So the other thing that we work on once governments have money is also how they can efficiently and effectively deliver services to their citizens through improved public financial management, which is why, Anders, in the definition of DPI that you pulled out from the Gates Foundation, we focus on that public service delivery aspect. But of course, it's very aligned with the way the bank defines it as well. So and the other thing I should add is that at the foundation, we are focused not only on raising domestic revenues, but also promoting equitable ways of raising revenues, right? So and equity can result obviously from the design of tax policy itself, progressive income tax more equitable than other forms of taxation, etc. But also from the way that taxes are actually collected. And a lot of you have spoken about that. And we see, so our approach, I think, to domestic revenue mobilization is sort of based on the belief that how governments drive increases in tax collection is integral to how much they can collect, if you see what I'm saying. And how much they're able to collect is also integrally linked to how much trust citizens have in the government to help improve their lives, right? So our work, I think, is focused not only on strengthening tax compliance and enforcement, but also improving the trustworthiness of the tax system by strengthening the social contract with citizens. So just very simply, I see it as, we believe that sort of generating value for society is a great tax reform strategy, simply put. And well-designed DPI, sorry, I thought I lost you for a minute. Anyway, well-designed DPI can deliver this value. So thanks, Anders, for talking, and all of you actually, for talking about the aspects of DPI that are necessary for revenue mobilization. You've all mentioned it. Digital ID to uniquely identify citizens and firms, interoperable payment systems to enable these payments to be made to and from governments, ways for citizens to give consent to use their data, protocols to reliably exchange data and about citizens, what they owe the government, what the government owes them, and then, of course, protocols for data security and privacy. And, we think that, obviously, Fabrizio, your research on what's actually happening is really important. But we do think that there's all of these things can work to broaden the tax base and increase revenue collection. There's as you are saying, the evidence on this is emerging and it's still mixed, but there is quite a lot of evidence that talks about reducing tax compliance costs. Even Isaac just talked about how online filing has significantly reduced compliance costs for filers, and I imagine also for the tax officials who are doing the work in tax offices, right? And then aligning incentives and for businesses and individuals to become part of the economic net. And early evidence from India shows that there has been a marked increase in the number of taxpayers, so broadening of the base. Some evidence also that revenue collections themselves have gone up. Now, of course, revenue collection increases is not only about tax administration, right? You can have a tax policy that's has a proliferation of tax exemptions or somehow isn't designed right. So I'm putting that out as a caveat that you also have to look at tax policy. And in that context, I actually wanted to have a question for Isaac about the e-levy, which whether all things considered, that's a good idea or not. Since yes, of course, it might raise revenues, but it also acts as potentially a disincentive for adoption of digital services. I just want to mention a couple of other things as well. Based on the experience in India, the goods and services tax system in India has really streamlined indirect taxation. E-invoicing and something called e-way bills, which is a document that's required to be carried by people in charge of conveying goods across states or even within states. All of that has served to basically make it actually difficult to stay out of the tax system, right? So enhancing efficiency, improve compliance and transparency, and allowing data-driven insights. But of course, there are still a lot of challenges. Digital transformation, there's literacy issues, there's connectivity issues, there's cybersecurity concerns, and so on and so forth. But I think it's promising what's happening in India. We also have, I guess, very positive experiences in Rwanda, and I know that ICTD will be having a conference there next week. So maybe there'll be some discussion around there as well. So suffice it to say that we are very positive on the potential for DPI, for tax administration, which is and we're really excited to see the work that ICTD is doing on the research and knowledge creation side, and hopefully greater partnerships also with people like the World Bank on the implementation side. So with that, I will stop and happy to take questions.
Thanks, Kalpana. Fantastic. Yes, lots to think about. I think we have 12 minutes left, and we have some questions already in the chat. I'm not sure if you can access it. We have 4 questions, 3 of which are for the GRA, and 1 is for Anders, I think, on the OPAL. So probably we can address this first. Anders, maybe you can share your thoughts on these questions from Sintayewu on OPAL. Then we can move to GRA.
No, it's a good question. I haven't seen any countries where it's been used, and that's not to say that is the case because it's not managed by us. But we are looking for ways to implement OPAL. Just to give you an example that goes to the political economy, I asked a good colleague of mine that was going back to a tax administration about sharing data. He said, no, we're not going to do it. What about Ministry of Finance? No. What about using OPAL? You can preserve privacy that you're so concerned about. And he looked at me and said, no. Right. So there's a lot of these type of issues. So also here, if there's somebody, whether in Ghana or somewhere else, that is interested in that, then we can see how we can kind of bring MIT and others together to kind of pilot that. And OPAL can be used in any organization, really. So sorry for not giving you a more concrete answer, but it's something I could follow up on with the OPAL community. Thanks.
Thanks, Anders. I wonder if Isaac or Dr. Combat, which I welcome, Assistant Commissioner for Research and Policy Strategy in the GRA, welcome. If you could address the questions for you in the chat. Thank you.
Okay. So one question asking percentage of figures of digital transactions that have been exempted. The nature of the exemption is not in the number of digital transactions. The exemption are crafted in a classified manner. So if you are sending 100 Ghana cedis and below, and that's your first 100 Ghana cedis, and it's a mobile money transaction, that amount is exempted. Then also, if you are doing a transaction, a banking transaction, the first 20,000 on daily basis is also exempted. So that's the way the exemption had been crafted. If you are also sending transaction to any account that belongs to yourself, that is you have multiple accounts. Once you transfer among those accounts, that is also exempted. If you are making payment for taxes, levies, government taxes, that is also exempted. If you are, what I talked about, the specified merchant payment, if you are making payment to a merchant that is registered with a GRA, that is also exempted. Then also, if you do a corporate transfer, if your account is owned by a limited liability company or a corporate entity and you do a bank transfer, it is also exempted. So the exemptions are done based on categories of the transaction instead of a certain volumes and transaction. I hope I have answered him correctly.
Thanks, Isaac. I think there is another one around specifically how the levy is collected.
Okay, so the e-levy is digitally, an API was shared with all the financial institutions in the country. We classify the financial institutions into the banking sector, the telecommunication sector, then those we call PSPs, and then also what we call SDI. These are specialized deposit-taking institutions, the banks, the telcos, who we call electronic money issuers. These are the categories of entities who are supposed to charge the e-levy. An API was developed and shared with all these institutions. So they integrate their core banking platform or their core application with this API. So data is shared digitally of their platform with a platform the GRA owns. And so by doing a qualifying transaction, your digital platform automatically imposes the 1% and it is remitted to government automatically. The remittance is done after end of day. So after the end of day, the system is able to generate a bill of all levies that you've collected for the previous day. Then we go to the central bank and we go and debit your Nostro account with the central bank so that you don't have to manually go and make those payments. Once we bill you what was collected the previous day, we go to the central bank, we go and debit your bank account. And so that is in a nutshell how the design works. An API, a bill being generated after end of day, then we go into the central bank to debit the amount.
Thanks, Isaac. I think there is a last one for you, and then we can move probably to which is around information sharing. The FIU has any relation sharing financial information? I'm not sure.
Yeah, I'm also not so sure about the question very well, but we do have already the data exchange law that allows us to be able to share financial data. So if it has to do whether there's a legal basis to share financial data, yes, we have an enabling act that allows the GRA to contact your bank and get your banking or financial information. I don't know if that answers him. He can come back for clarification. Yeah.
Absolutely. Thanks, Isaac. Kalpana, I think there is an interesting question for you here around how can proper donor coordination when it comes to DPI projects be guaranteed?
It's relatively new, and of course there's the foundation, but there's also in fact the GIZ and other donors are interested in funding. there is a mechanism called co-develop, which is intended to sort of crowd in and coordinate funding, and we are associated with co-develop as a way to coordinate funding. I would say that that's actually still being assessed, but it's a relatively new area and a relatively new sort of set of investments, and I think the person who asked that question is exactly right. I think this is a great opportunity to get donor coordination right out, early in the game, and co-develop is only one of those mechanisms. We also actually now have the World Bank, and maybe Anders will say a bit more about that, a new VPU set up actually for digital, and maybe that's another way of coordinating donors.
Yeah, I think at the World Bank, we recently set up a digital vertical that, as I understand, would look very much at the infrastructure, the hard infrastructure, the identification. We have an ID for development initiative, payment system, so on. Obviously, at the same time, digital part of everything we do, right? So it's like going back 1,000 years and say we're going to have a division only focusing on paper, right? So I think it's going to be a mix of these different layers operating. Right, for some countries, it's really about getting the internet out. But if you begin to say, well, what about more advanced services like interoperability platforms? I think the digital part will take the lead on that, except where we have the client dialogue might not be with a ministry of digitalization, which could be politically weak, but it would be, for example, with the tax authority, which has been really pioneering this work and would in many countries be politically stronger, right? So I think we'll have to model through on this agenda, or rather create a lot of alliances in connection with specific country engagements.
Thanks. Just going again for maybe another round of questions. For our GRA colleagues, again, there's a questions on whether there are some specific areas where you think research could shed light to reform GRA interventions when it comes to digital solutions, if there are specific areas.
On my part, I don't know whether Dr. Combat would want to add something, but on my part, studying customer behavior, if we could do further research into how they respond to some of these government policies, and then that should help with better formulation of tax policies, how it affects customer or taxpayer behavior. I don't know about Doc, if there's something he can shed light on. Yeah, Doc.
Okay, from my side, I would just say that if you take the e-levy, of course, it has raked in some revenue, because when you look at the figures, 2022, although we started in May, we were able to collect about 643 million Ghana cedis. And then the following year, which is 2023, we were able to collect about 1.2 billion. And this year, as at October, we've collected 1.6 billion. So that is to tell you that at least we are raking in some revenue to fill some gaps. That notwithstanding, we also will have to look at the other side of it, especially when it comes to financial inclusion and financial exclusion. And this is the area that I feel we can actually look at. And then we can juxtapose that with the revenue that we are collecting, because they are all equally important. Although we need a revenue, but we also need some kind of or form of financial inclusion, which is very important. And so I think that is the area that I'll be interested in if there should be some research. Thank you very much.
Thank you, Dr. Combat. Yes, related to that, I think is a last question, and then probably we can end, always for GRA, around what is the immediate impact after the implementation of the specified merchant payments tax. in terms of exemption. So if GRA has any evidence in terms of the impacts of these incentives, we did some work together on this, right? And just for full disclosure, we are planning to do more work on the topic. But Isaac and Dr. Combat, please add.
I believe the immediate impact was the high level of informal registration data, the numbers, prior to even the go live in May of 2022. When we looked at our registration data, we realized that the number really went up. And also by the relationship we've established with the telcos and the banks, there is a demand that those who are unable to take advantage, the telcos want to come out with an agreement between the Revenue Authority and the telcos to help these people take advantage of this specific exemption. So that is the evidence that we have internally on that's fair, yeah.
And just to add something a bit to what Isaac talked about, I think the reduction in the rate has also actually led to an increase in transactions. So that is one aspect that we also have to look at. Because when you look at the original rate of about 1.75, which later was reduced to, it was originally 1.75, okay, and then reduced to 1.50. And then a year later, it was reduced to 1%. This has actually helped increase transactions. And that has always been our recommendation, that the rate is reduced and then we can get more people transact businesses using the Momo. Thank you very much.
Fabricio, before I go, someone asked a question between the 10 for individuals and businesses. So there's a separation. It is only persons, humans, that we use the national ID to represent their taxpayer identification numbers. Non-humans like limited liability companies and other corporations do not use the national ID. They still maintain a numbering system that the GRA is the one that administers that. So that is able to distinguish clearly between a person, human, and a non-human entity.
Thank you. Yes, I want to also connect to that by saying that the next episode of this webinar series will be about IDs. We're going to dig deeper on the potential of these IDs for identify taxpayers. So we'll definitely elaborate more on that. I think we reached the time, and I wonder if Anders or Kalpana, you have any last words? Or on my side, I just want to say that I'm very happy for how it went. It was a very enriching discussion. I want to also inform everyone that Kalpana was saying next week we're going to have our international conference on digitalization in tax administration in Kigali, co-hosted by the Rwanda Revenue Authority, and there is a link for if you want to join the stream versions. There's a link in the chat. So, we're going to keep talking about this topic for next week as well. And the next step, the next session for this series will be in the end of January, most likely, but everyone will receive notifications on this. Anders, you want to say some final words? Or?
No, thank you very much, everybody, for a very rich discussion. I really like the different perspectives. It also shows that this is an agenda that moves both in the digital sphere, in the kind of more social policy sphere, and also in our slightly more technocratic tax sphere. So it's very rich discussion. So I look forward to being part of this series. And thank you very much for your partnership, and great to meet colleagues from Ghana and Bill and Melinda Gates.
Thank you.
Thank you, everyone. We can end it here then. Have a